Hi, and welcome back to the Intentional Wealth Update with Morton Brown Family Wealth. I'm Dennis Morton here with Katie Brown. Katie, how are you doing?
Hey, Dennis, great. Glad to be here.
So we're coming up on the tail end of summer. It's been a good year so far for the markets, but you and I have been caught off guard by a couple of conversations recently with clients who brought up the issue of fear and things that they're bringing to our attention saying, oh no, I'm scared that this could happen. I need to act upon it. We hear this a lot, and we see the repercussions of it coming out of a bear market last year. Katie, tell me a little about how fear shows up in our clients' lives.
I think you said it exactly there. Coming out of bear market environments, we see such an increase in advertisements, marketing, those fear-driven commercials that say, all right, if you don't want to lose your money, you have to do this thing, or you should do this thing, or here's the place to get income, here's the place to protect your money, here's the place to keep it safe. Those safe conversations, they spike incredibly after periods of volatility within the market, which is interesting because once you start to get over that hump of the volatility, usually the investing market looks better going forward. And sometimes those things are almost taking a step backward. So just the timing of it's fascinating.
Yeah, that's, I think, the issue I really have with fear sometimes is how our industry uses it against our clients. You know, it's almost like predatory. It is predatory. I think back to my early days, like back in brokerage world, starting out on Wall Street, and you would have kind of a list of securities and you'd call people up and say, you want to get in on this? Be careful, this is going to happen, and creating this sense of fear, hoping that people will act and then buy. And I think that's always the thing that's at the end. You know, if somebody says, hey, this is, your taxes are going to go up, this is going to happen, you need to do this. There's always a pitch at the end. Somebody's trying to sell you something. And that's what we hear a lot. You know, some of the fears, we talk about recession. That was, I mean, I don't know where it is, but it was supposed to be here this year and it didn't happen. But that was a big fear last year. Taxes going up or the political winds shifting. All of them are trying to create this sense of urgency, and you got to do this now.
Right. Well, and for good or bad, people do act more under urgency and fear than they do when things are going well. And that's something that we often talk about. Like, take a look around you, recognize the things that are going well, and how do you position better going forward to ensure that they continue on, a strong track, or when they don't, that you don't start to make decisions out of fear, that you've made them from a healthy place the first time around.
You bring up a good point, because I think this is something that we've become better at over the years, is talking about fear and safety when markets are up, and talking about stacking the deck in your favor and growing when markets are down. That's the good discipline, right?
Yes.
So we're having a good year in the markets. By the way, let's remember, we're not going to get fearful when things go sideways again, which they will.
Yes, and they will. They always will. At some point, I had a conversation yesterday actually with a client, and she was concerned. What if things become more volatile? Should we still be invested this way? Should we change things? Like, what should we do? And in my response was, yes, things will get more volatile. I don't know when, 12 months, 24 months, I don't know when, but it will come. And you did very well through the last volatile period from the standpoint of we stayed on track with your plan. We communicated, you knew kind of what to expect, and we did some productive things. So looking forward, I don't recommend that we make any major shifts out of the concern or fear that something might happen. Let's focus on how you're positioned and make sure that's an all-weather positioning. And I think a lot of our advice stays the same, but we get that question often. What if something happens? What do I do now if that were to happen?
Yes. Yeah. And you and I were talking just before we went live, just about our own fears. Like, have we had any fearful moments in the markets? You were in the business in 2001, correct? In September of 2001?
I had just started in the business September 2001. Yep.
Okay. All right. So, and I started right before the great financial crisis, and we've had any number of fearful moments ever since. Is there a moment or time that you've been fearful? If so, like, how does that show up? Like, as an advisor or even as an investor taking off your advisor hat?
I think for me, the biggest place that it shows up is as an advisor, making sure that I'm doing the productive things all along the way. I think I have the fear sometimes of Like, is there something better that I should have done? Similar to clients, there's always that question, is there something better or different that I should do? But then hopefully applying the discipline to say, all right, here are the productive things I can do in this period of time without abandoning the plan. I always try to remember the context of the plan. But I think my personal fear is, am I doing everything in my power? Like, I know this is a challenging and anxiety-filled time for a lot of clients, a lot of individuals. Am I doing everything in my power to remove as much anxiety from this side and helping to kind of work through the anxiety where it does show up?
Sometimes the solution, like the product pitch, it's pitched as the antidote. Like, if you're fearful, this is what you need to do to fix that fear, to bring yourself peace. But truthfully, the antidote is more patience, which is, I think, what I hear you saying. Whatever allows you to be patient through those fearful moments is going to get you through to the other side, more so than bailing and buying something else or ditching your strategy. I feel like there's an attribute that served me well as an investor. It is patience. If I see people running for the door, metaphorically, I'm willing to sit there in the chair for a long time. Like, I can wait things out. And I think that served me well, both in this career, taking a long view, helping investors, everything else. But I'm also aware that if everyone starts running for the door, there are implications to that too. Just because I'm sitting still, like, I always think back to, I think one of the darkest moments for me as an advisor was that, it was the third week of March in 2020, when it was the bottom of the market, will be later on. But the conversations we were having with clients, a lot of fear that they were having, and people were just bailing on, a lot of things. The world was shutting down. And I think the scary thing is, okay, what are the implications if everybody starts doing the same thing all at once? Because the markets are based in confidence. And if that confidence erodes too quickly, there are massive implications for that. So I think we did a good job communicating and staying the course, and it ended up doing really well on behalf of our clients, that we were even keel. But there's also an awareness that comes in. Like, okay, I'm aware that everyone else is fearful, and that could have ramifications.
Yes. So what about, all right, let's go back to the fear conversation for just a minute. What are the implications, good side, downside to investing or making moves out of fear?
I think the downside is, if you're doing something out of fear, a lot of times you're either locking in or locking out. That's what a lot of what's pitched, or things that are going to, if you want to get tax advantages, many times you're going to have to put something in a product that is going to give you tax advantages, but you give up liquidity. Or last year we had people buying long-term CDs or things that are locking in, fixed annuities, those types of things are locking in interest rate. That's great, but once you've locked it in, what if rates go up or go down or fluctuate? You can't make a better decision later on. So there's always those trade-offs, and I think out of fear, and say, in the interest of safety, I'm willing to lock in or lock up. You sacrifice flexibility in your plan. What do you say?
Yeah, I completely agree with that. And I think it's interesting because I have seen with clients before that at the time that purchase is made, they feel really good. They're like, okay, I protected against this thing. What they don't always recognize at the forefront is how that shows up in anxiety later. So like you said, that lockup, that illiquidity, because you can never predict at the front end how your life is going to change or evolve going forward and what you might actually need some of those assets for. So there's always that trade-off. And I think sometimes that trade-off is okay for a portion of the portfolio, but at the end of the day, it always goes back to diversification. It's diversification of assets, it's diversification of tax buckets, it's diversification of everything else. Like, that is going to be part of what's going to get you to that long-term success. But when there's too much locked up, and then all of a sudden there's a life event or life something where somebody needs something, wants to do something, and they realize, I can't get to that money, I can't get to that piece to help support the thing that I really want to do now.
Yeah. I found it helpful sometimes in talking with clients, as we kind of coach people through these conversations, ask them, what are you actually afraid of? What is are you afraid of running out of money? Are you afraid that, sometimes we'll hear, well, what if the stock market goes to zero? That's an actual question. I would say, have you heard that?
A lot.
Yeah. If the stock market goes to zero, if Apple is no longer in existence, if Home Depot shutters its doors and never opens, if Walmart goes out of business, we've got bigger problems than your retirement portfolio. that's truthful. I mean, if you crack open an S&P 500 fund, there are hundreds of companies in there, really well diversified. The implications of that. So if you kind of talk through almost to a ridiculous point, then it starts to kind of chip away at those fears. And another thing that we've been noticing is there are cases increasingly where people have a lot more money than they thought. They're not outliving their money as much. It's like you're fine. Your nest egg is great, even with all of the volatility that goes down. So if you're afraid of running out of money, let's talk that through.
Planning conversations during years like 2022, they can be tough at times, but actually they're some of my most favorite conversations. When the market is stressed, if there's something personally in their lives. We work with some clients that have some highly concentrated stock because they might have been an executive or so forth. And so if there are periods of time when that stock is lower than expected or et cetera, to go back and stress test the plan and to come through and say, you're okay. Or if we had to, this is what we do. This is where we shift in the plan, in the big picture. I think those are some of the most meaningful conversations when everything's going kind of crazy in the world around, and we can zoom it back to what does this mean for you and your family, and to know that you're okay.
You know what that is, Katie? That's a really good point, because a lot of it is actually facing your fears. Like the planning process is pulling up and saying, okay, this is a 20% down market, or this is the highest inflation. You're facing your fears, stress testing them in reality. It's hard to buy into the theoretical. Sometimes that could happen, might not. But when it actually shows up, and we see that in our longer term relationships, that the equity that you build in trust, coaching people through those down years, it pays dividends later on because they faced down some of those fears and they know they're going to be okay. Mm-hmm. So you would have a case this morning, someone who just started working with us at the beginning of 2022, and that's a tough starting point. Yeah. But if you retired into the teeth of last year's market, you've earned your stripes a little bit. You faced down some fears and hopefully come out on the other side pretty good, or at least with some better perspective about what can happen and how you respond to it.
Yes. I think it's interesting too. Sometimes the preying on fears can be very specific. It can be, this tax rate is going to change. Here are the things you need to do to protect your money from paying additional taxes. Or this estate law is going to change. Here's what you need to do to shift some. Like sometimes they can be very granular and specific, but then the solution to it is a huge solution. Do you know what I mean? Like, yes. Let's move this giant piece of investment over here so that I can save this much in taxes if the laws change.
And we've seen it pitched where, here, buy this thing and then you get to work with our planners. Mm-hmm. That's happened. That's why the planning comes first, then the tactics.
Yeah. So definitely caution, because I'm sure everybody listening to this has already gotten dozens of emails probably this year. They hear it on the radio. You see it all over the news. Like, here's your solution. Here's the thing you need to do. Here's the thing you need to buy. Just always remember, wherever that's coming from, they have no idea what's going on in your own personal financial life. And very likely that's probably not the number one solution for you. And if it is, it's not the singular solution. There's never a singular solution.
You know what I just thought of? You know that commercial with the chainsaw guy standing in the thing full of chainsaws, and the people are. It's like, what do people do in a horror movie?
Yeah.
They're like, don't go to the car. Go hide it with the chainsaws. And it's funny because you know what they're going to do because you're watching a horror movie. Well, it's almost to take a little bit of a detached look at it. You know what we're going to do when the market happens. People are going to pitch you stuff. It's just what people do when markets get wonky. So anyway, I just had that funny image of rolling our eyes. Like, here we go again. We're going to get pitched another idea, but it's okay to just be a spectator. All right, let's end on this one. Best horror movie of all time.
Oh,
what do you think?
I don't know. I don't watch too many horror movies. I think actually one of them that freaked me out probably the most. Do you remember this movie, The Ring?
Oh, The Ring. I wasn't going to go there, but that's an excellent one.
Yeah, I saw that one. I remember seeing that in the theaters, and yeah, that freaked me out.
Yeah, that was probably the last cultural reference to a VHS tape that there ever was. I could show that to my kids. My kids wouldn't even get that anymore. This isn't even scary. What's that thing you put in the? I really like The Conjuring. Kind of a recent phenomenon the last couple of years. The Conjuring series, really good, good stuff. Yeah. We're getting up. After September 1st is Halloween season. Here we go. All right, well, thanks for joining us again for this conversation about fear. Again, we talk about things when things are good. We want to remind you that they can sometimes change. When things are bad, we're going to talk about the changes that can happen on the positive side. But if we can be of assistance to you, feel free to reach out to any member of our team, and we wish you all the best.